Transaction Capital, a name perhaps not known to some of you, has announced its intention to list on the JSE in June this year. The non-deposit taking financial services group is active in specialised lending, credit services and payment services. Tell us more about the listing. We're joined on the line by the Chief Executive, better known as Chief Executive and Chairman of Massmart, Mark Lamberti. Hi, Mark.
Hello, David. Good evening, gentlemen.
Tell us what Transaction Capital is, firstly.
Well, Transaction Capital today is a combination of 6 businesses, 4 of them relatively large businesses, which were all founded in the last decade. 3 of them have been part of our, been owned by my partners for that decade. 1 was bought more recently. The services businesses are a credit services business where we collect debt on behalf of the major retailers in the country and on behalf of some of the banks. And we also purchase delinquent debt and collect it on our own balance sheet. That business collects debts to the value of about 22 billion rand is the debt available for collection at the moment. Our payment services business is an interesting business based on a network of about 4,100 ATM machines around the country. That also coincidentally puts through about 22 billion rands of cash a year. The third of those businesses is a taxi financing business. To our knowledge, we are the largest business focused solely on financing taxis. The national taxi fleet in South Africa today is about 220,000 vehicles, of which about 60,000 are financed, and we finance about 22,000 of those. Yeah. So those 3 businesses have been with us a while. 2 years ago, we bought an unsecured lending business, which accounts for about 40% of our revenue and profits, called Bayport. And the reason for having all of these businesses in the same group, as it were, is that the financial services expertise involved is common across them, or the client base is common, or the funding base is common. So that's it in a nutshell.
Mark, it does sound like some of that's on the rough side of the street. I would think you've got a couple of ex-boxers among your directors for the debt collection stuff, and of course the taxi industry, we know that they are supreme to the constitution in South Africa, so high risk and reward here.
Well, I think the notion of debt collection being unsophisticated is long gone. We use proprietary technologies, very sophisticated technologies, through 8 call centers around the country to collect this debt. And of course, we're subject to all kinds of regulations to which we comply with those regulations, both in the spirit and in the letter. So it's credit collection is no longer a baseball bat industry.
Derek's got a question for you, Mark.
Mark, just on the unsecured lending business, as you mentioned, I think it was about 40% of revenue that it makes up. If you look at the unsecured lending market, and obviously looking at similar companies like a Capitec and the likes of some of the other banks moving into the unsecured lending space, where do you sort of share a sentiment that there could potentially be unsecured lending bubble taking place, and there's a lot of talk around the risks attached to that unsecured lending market. What are your thoughts on that?
Yeah, well, first of all, I would say that in the scheme of things, we're a minnow. The unsecured lending market, as you know, is something north of 100 billion, and we have a book that's not even 3 billion just yet. So I think we are not a victim of the movements of that industry at that size, and can be fairly dynamic in how we respond to the various trends. Having said that, though, we can also be selective in who we grant credit to and how we grant that credit. And so we are not out to grow this business at a very rapid rate, and we will rather be cautious in the way we approach this. To answer your last question, I'm a little puzzled by how there could be a credit bubble unless there is widespread misrepresentation of their situations by borrowers, in other words, overstating their income or understating their expenditure, or on the other hand, some kind of reckless credit granting by the banks and lenders. Now, I have no reason to believe from the credit checks that we do on our clients that the first is happening, and I would be very surprised given the regulations of the National Credit Act whether any reputable institution is granting credit recklessly. So I think that insofar as whether widespread unemployment would put pressure on this market, there's no question of that. But I don't actually see a bubble at the moment, and we don't see people incurring excessive debt.
Okay, we'll have to leave it there. Thanks, Mark. There's a lot to talk about. A new listing is always something to talk about.